Hello friends, welcome to the weekly webinar of Proficient. Myself, your friend Shuman. This week, as scheduled earlier, we will be talking about the weekly technical analysis of the market, the global perspective, and back home, what is happening in Indian markets. So let's start with the global perspective. First of all, let me show you the chart of dollar index. This is the US dollar index daily chart, as you can see from my chart. This is the index about what the US dollar is faring against six major other global currencies. And as you can see from this chart, the uptrend is quite obvious from this chart. Dollar has been appreciating against euro, and all other major currencies across the world. It is trading above its major moving averages of 250-day denomination, and since dollar is appreciating, we can expect some selling pressure in commodities, and that is more profound in case of gold, but there are more fundamental forces in crude oil and in copper. So let us come back to the gold chart first of all. As you can see, the gold has been depreciating, and the gold is in an intermediate downtrend, as I had told you a few weeks earlier. The strength in dollar index is weighing heavy on gold, because gold and all other commodities are denominated in dollar term mainly. So if dollar appreciates, so all these commodities are likely to show weakness. So that is exactly what is happening, as you can see from the gold daily chart on my screen. And the last major bottom was, it was in fact a choppy range until end of April, when gold decisively broken the $13-20 per ounce mark in early May. And since then, there is no strength. And right now, it is trading below most of its moving averages. And as you can see, a dead crossover is likely to occur in gold daily chart. The red one is the 200-day moving average, and the blue one is the 50-day moving average. So the 50-day moving average is about to cross the 200-day moving averages, and this is sometimes referred to as a dead crossover, which is bearish signal, of course. But many days prior to that, the gold had actually broken the floor of the choppy range in early May at $13-20. Now, as you can see, the trend is gaining momentum. The downward trend is gaining momentum, and let me convert this chart to weekly time frame. Yeah. So yesterday's closing was at $12.70 per ounce mark, and where it is likely to take a support, 1250 region is the immediate target for gold, right? We are expecting some pullback from that region, because in December of 2017, there was also a support at that region. And in any case, if gold breaks that level, which is the 1250, then the intermediate downtrend will regain further strength, and that will be the first signal of a primary downtrend. And in that case, there are still weekdays. There will be still weekdays ahead for gold. So the strength in US dollar is being pretty clear in the gold. But when I open the chart of crude oil, that is not the case. In fact, there are more fundamental forces operating in crude oil, because last night, as we were all eagerly waiting for the outcome of an OPEC meeting, and OPEC came out with a decision that it is going to increase the production by 1 million barrel per day. Now, this may seem bearish. Initially, this may seem bearish for crude oil, because if there is an increased supply, then crude oil is likely to see more sell-offs, right? But that is not exactly happened. Why so? Because 1 million barrel increase in output was already factored in prices, and that's why market did not see any greater threat in that kind of outcome, and so it rallied. When the confusion was taken out, prices rose further. And yesterday, crude oil closed at $68.58 per barrel level, which is nearly 5% rise. Above $67 mark, the intermediate downtrend has been over for crude oil. That's what is my interpretation from this chart. And we also had taken a long position in our MCX market. In MCX market, crude oil has closed last night at around 4700, say 4770 mark, and as long as it is trading above 40 45 50 region, so this uptrend is pretty strong, right? So the uptrend is likely to continue, and the overall primary uptrend is very strong. And with last night's movement, crude is again trading above its important moving averages of 50 and 200 day denomination. So the weakness in dollar index is not casting any negative shadow on crude oil, and that is what we take, because OPEC decision was more important, and output and the important factors of supply are playing more heavily on this energy stream. So our view is bullish in crude oil. Overall stop loss will be 65 barrel, and unless $65 per barrel gets broken, the intermediate uptrend that started last night is likely to continue, and nearest target we can see as $73 per barrel mark, and beyond that new prices are expected, which is very likely to happen. So right now, all pullbacks in crude oil we can recommend to buy on weakness. Overall stop loss will be $65 per barrel mark. So having covered the US dollar index and the major commodities in crude oil and gold, let me open the chart of US equity index, which is the S&P 500. And here we are entering into the stock market, right? Whatever you can see on my screen is the daily chart of SPX, of S&P 500. The symbol is called SPX, and you can see that it closed last night at 2755 mark. And for the few months past, we had been given a bullish opinion about it, and prices have been in a short-term upward trend, and it has not shown any major weakness. Prices have been trading above the major moving averages of 50 and 200 day denomination, and so the bullish opinion we are maintaining. They are likely to continue, and nearest support is at 2714 region, which is the 50-day moving average. And further below, we can take a support at around this zone, which is 27, or rather, which is 2690 region. So unless 2690 region is broken in SPX, that is in S&P 500, the large cap index of US market, the upward trend is likely to continue. 2800 is the nearest support, and we can see multi-month resistance area at that region. Nearest resistance is the 2800 because we can see the February top and the March top in that region, both confluences there. So this is going to be a strong supply area. But if S&P 500 manages to surpass that supply area, the chances are very high that the all-time high of 2875 will be challenged, and the longer-term primary uptrend will reassert itself in much more strength. However, the 200 GMA is anyway surviving, and it has provided a lot of support in the weakness of April and in the weakness of May. So the 200-day moving average has not been broken as yet. So there is no point in making any bearish opinion. So we are reasserting our bullish view in S&P 500 as well, and the immediate stop loss will be 2714 region, and the uptrend will continue unless 2690 is broken. So that is our view in US market, the global market perspective, that is. And if that is the case in global market, then let us come to the perspective of the Indian equity market. This is the chart of the Nifty 50 index. That is our index of the Indian equities, the large cap index. And this is the daily chart, of course, and the blue line is the 50-day moving average. And as you can see, very alike to the S&P 500, the Indian equity market have also traced out a similar pattern. It has not broken the 50-day moving average since third week of April, only with one exception in third week of May. Last week saw a very volatile action though, and market for a brief period on Tuesday violated the previous week's low, and it was appearing pretty obvious that the 50-day moving average will be broken at around this level, which is 10,650 region, but that did not happen. Prices made a smart recovery, especially last Friday, late afternoon, towards the closing session. And with that, Nifty closed at around 80 points higher yesterday. That is on with a daily perspective. On weekly chart, we do not see much of change. Only, on weekly time frame, we see an absolutely flat closing, although much lower prices were established, but moves came along and they show a smart recovery, and prices closed absolutely flat on weekly time frame. Now this closing that occurred on 11th of May, the week ended on 11th of May, was at 10,806. We got a closing higher to this level. So you can say that on a weekly basis, Nifty closed at its 4-month high, right? Since February, this is the highest weekly closing. So that is pretty bullish in nature. It does not leave much of bearish interpretation. However, in the whole process, we are having 2-3 higher bottoms. The first one is here, which occurred on 23rd of May, which occurred at 10,430. The second one occurred in 5th of June, occurred at 10,593. And so far, the 19th June low is holding on. It occurred at 10,710. So all these bottoms are progressively higher, which is a trademark of any uptrend. So we can say from this chart that the short-term uptrend is continuing, And unless this bottom, which occurred at 10,710, roughly 10,700, gets broken, we will say that the short-term uptrend is likely to continue, and the immediate high of 10,893 is likely to be revisited. And once Nifty closes above this level, so you can see from the chart, Nifty has not closed beyond this level for many days. In the past 3 months, we have never given a close beyond 10,900 region. So if Nifty manages to do that, if Nifty can really close above 10,900, then the similar thing is likely to happen that we are expecting in S&P 500, which is the lifetime high of 11,171 is likely to be revisited. So this is a bullish opinion, and this bullish opinion will be legitimate as long as Nifty stays above this value of its 50-day moving average, which is 10,670 roughly, 10,650 roughly. Okay. So if that happens, if Nifty really does not close below 10,650 and it goes higher, then now allow me to come to some certain stock specific actions. And what is likely to happen in stocks? Which stocks are more likely to outperform if Nifty really does not violate the 10,650 region, right? The first one, I'm adopting here a top-down approach, which means I'm first of all identifying the sector, and then I'm coming into the individual stocks. This is called a top-down approach. The first sector that catches our attention is the financial sectors, especially private banking sector and NBFCs, large cap NBFCs obviously. This week I'm confining my analysis into large cap, which is unlike other weeks where I have given many mid cap recommendations as well. This week I'm keeping my recommendations to large caps only. The first sector that catches our attention is the financial sector, which comprises of certain strong private banks as well as certain NBFCs. So let me show you the chart of HDFC Bank. This is an extremely strong upward trending stock, and for the past 2 weeks it was very muted, right? After making a high at around 2139, it retraced as low as 2000 levels, and but even after that, the nature of the uptrend was not hampered. The higher bottom formations was still maintaining, and the entire episode of pullback was nothing but a buying opportunity. And as of now, this buying opportunity or whatever has matured, and a higher bottom, a new higher bottom has been established at around 2000 level, and it is likely that the primary uptrend is resuming, and the previous high of this level 2140 region will be retested, and if the overall uptrend continues, then it will be penetrated upward and new lifetime high will be established. So as of now, from this chart you can see the series of higher bottoms, and the last higher bottom is here at around 2010 level. The previous bottom is at 1960, and the prior to that was at 1923, and all these things. So we can see progressively higher bottoms, which is a trademark of any uptrend. And as you can see that if the latest bottom, which is at 2010 level, is not validated, prices now is at around 2080. So if 2010 is not broken, then the uptrend is likely to continue, and this is a long-term investment grade stock. We can recommend to buying this stock in all pullbacks. So right now Again, although we are pretty off from the low, but still the risk and reward ratio is in favor of ours, so we can recommend to buy it with a stop loss at 2010 or roughly 2000, and any target is possible to the upside. Right now the immediate target is 2150. So that's the first stock we spot from the private banking or the financial sector. The next one is a very important NBFC stock, which is Bajaj Finserv. Yes, this is the daily chart of Bajaj Finserv. As you can see, the stock price is pretty high, but I am not paying any attention to that. If the uptrend seems strong, which it does, prices has been trading above the important moving averages. The 200 EMA moving average has been providing a lot of support to this stock. Price has never closed below it, and yesterday we saw a very strong upward movement, and it closed at a new life high. You can see the strong nature of this uptrend. Almost in regular interval, it has been making a high bottom formation, and I can also see, and I'm showing you it here, a nature of ascending triangle breakout, a sort of ascending triangle breakout. Here it is. So this is the ascending triangle breakout, which is a sort of bullish continuation pattern, and there are lots of implications with this. This is nothing but it says in short term that the uptrend has got a new lease of life, and prices has established a higher target, which as I'm not telling you right now. I'm only telling you to keep faith in the primary uptrend. Wherever you see any primary uptrend or any primary downtrend, you have to trade in the direction of the primary trends. And as you can see, Bajaj Finserv has been showing a primary uptrend, so I recommend to trade in the long term for in the direction of the primary uptrend from the buy side. And the longer term chart also shows that there was a pretty strong consolidation period here. Yes, it was a pretty strong consolidation period. The last time this lifetime high was made was in September of 2017, and this life high was violated only in last month, which is in May. So this 8 month of consolidation has been broken upward, and chances are very high that this upward trend will continue further, and you will get higher prices with this stock. In the upper part of my screen, in the upper pane, you can see the stochastic oscillator. I had explained this oscillator earlier in my previous week's presentation, that the stochastic oscillator, here I am making it bold. The stochastic oscillator is good to point out the overbought and oversold conditions in the market, provided you truly understand the nature of the trend. If the nature of the trend is upward, if higher prices are ahead, then you will not sell the overbought conditions, right? But you will buy the oversold conditions. I have encircled here the oversold conditions for this particular stock. The encircled portions, you can see prices pulled back and prices were really depressed in this region, and these depressions were actually our buying opportunities, right? Yeah, so you can see 3 or 4 incidences when prices, or the stochastic rather, came below its oversold region, and these were our buying opportunities. One thing I'd like to remind you here is that the stochastic or these kind of momentum oscillators can help you only if you can identify the direction of the major trend. If the direction is up, do not sell the overbought conditions, but try to buy the oversold conditions. If the direction of the price is down, that is, there is a primary downtrend, then you will have to do the reverse. You cannot buy the oversold conditions, but you will have to sell the overbought conditions. So in this way, you will always be in the direction of the primary trend, and you will take advantage of the short-term pullbacks, both in the upward and downward conditions. What is most important thing to understand here, that you should not take any trade which is against the direction of the primary uptrend. Okay, then let me proceed to the next stock, which is again an NBFC stock, and this time I'm going to open Bajaj Finance. So both Bajaj twins are very good stock. Fundamentally, they contain the same gene. They both belong to the Bajaj group, and as you can see from this chart, Bajaj Finance is also showing very strong fundamental upward trend. It's the primary upward trend. The 200-day moving averages were validated a few times in February and March, but these violations were never confirmed. And pretty soon, the series of higher bottoms was established here in this region. This is the bottom, this is the March bottom, this is the May bottom, and this is the June bottom. So all these bottoms are progressively higher, and these progressive higher bottoms are the classic symbols of uptrend. So as long as this uptrend is continuing, you can expect all pullbacks to be buying opportunities. And yesterday, Bajaj Finance also closed at its lifetime high, as you can see. And whenever the stock hits its lifetime high, we have to trade it from the long side. There is no questions. There is no point in asking whether the stock is fundamentally overvalued or not. We do not ask that kind of questions. We try to stay in the direction of the market, direction of the primary trend, and it says the primary trend is up. So we will take a buy position from in this stock, and our stop loss will be 21.97 was the last time the bottom was made. So this will be our stop loss, 21.97, right? In the longer term, much higher prices are expected. Even if this stop loss is triggered, one thing, allow me to tell you one thing, that even if this stop loss that I told you is triggered, that doesn't mean that the uptrend is expired, right? For an uptrend which is such strong, right, which is such fundamentally assertive, it will take a lot of time and a lot of price action to destroy this kind of primary uptrend. So even if these stop loss are our what should we say? These stop losses are our risk containing measures. We will accept the stop loss if the stop loss is triggered, but if prices come lower, then we will again try to trade it from the long side, right? Now, these were the stocks in finance sector, and let me show you another sector, which is FMCG. I've been pretty bullish in this sector for nearly 2 or 3 months now, and the stocks have been also performed quite well. Hindustan Unilever is the strongest performer in this sector. Although Hindustan Unilever did not do quite well, or it was arrested in a type of choppy range for past 2 weeks, but that does not mean the uptrend is under threat. The uptrend is pretty strong and it is continuing. And the last bottom we made is at 1550 to 1560 regions. Stochastic is also at its oversold region, so this pullback, which is now some 2 weeks old, is giving us a buying opportunity, and that's why I'm recommending you this stock. Hindustan Unilever, you can buy with a stop loss at around 1550 and for higher target, right? Another stock in FMCG sector that catches our attention is Britannia, and I have also showed you this chart many a times in this webinar. And Britannia also remained in a choppy range, or in some muted fashion. It did not do much in terms of upward movement, but nevertheless, the primary uptrend is continuing very strong, and the pullback that is occurring is actually a buying opportunity. Yesterday, it made a high at around 59.98. So anytime next week this high is highlighted upward, that is, if Britannia goes above 6,000 earlier, sometimes next week, that will be another buying opportunity, and the stop loss will be around 5,900, 58.95 region, and the higher prices are possible. The next important sector that I like to draw your attention to is the IT sector. TCS is the strongest player in this sector. It has shown tremendous strength, tremendous primary upward nature, and we are recommending it to buy. Recently, there was a buyback offer in this stock, and there is much more volatility, and the volume has increased recently. But as long as TCS maintains above this region, which is 1720 mark, the primary uptrend is intact, and any pullback will be buying opportunity. The same holds true for Infosys as well. Infosys also belongs to the IT stock and one of the largest IT stocks in the sector. And as you can see from this chart, last Friday, I'm talking about the previous Friday, there was a huge rally, and the stock closed above its the stock closed at its lifetime high. But this week there was a pullback, and a new bottom is probably being made, right? The bottom is being made at around 1236 region. Right now the prices are 1248, 47 region. So if 1230 region is not broken next week, the chances are very high the prices will be making new lifetime high, and 1300 will be approached by this stock. KPIT is the only mid-cap stock that I am going to recommend you this week. It is also belonging to the IT sector, but as you may be aware, if you were following my recommendations for the past several months, that I have been recommending this stock for pretty long time, and the stock is performing nicely. In first week of June, there was a pullback. There was some serious sell-off, but even that sell-off was contained above the previous bottom. The previous bottom was here at 247 mark, and the sell-off made a new low at only 260 mark. So the series of higher bottoms is being maintained, and as long as prices are staying above this level 260, one can keep a buy position. Immediate stop loss will be 270 for short term, for very short term. 217 with a stop loss, and in case prices can comfortably go above this mark, which is the 284 mark, a new that will be the beginning of a new intermediate uptrend, right? So these are the sectors that caught my attention that I'm recommending you for the next week. Just to recap, I am recommending a buy position in NBFC and in finance sectors, especially in private banking, which is mainly HDFC Bank, Bajaj Finance, Bajaj Finserv, then IT sectors, then FMCG stocks. Now, having said all of these things, another thing that catches our attention is that the pharma sector, which has been talk of the town recently because of their strong rally last week, actually for the last 2 weeks. This pharma sector is actually showing some sort of weakness. As you can see from this chart, the primary trend is downward, and in this primary downtrend, the past 2 weeks there was a pullback. Prices really rallied a lot from 2000 odd levels. Dr. Reddy's has bound to 2400 odd levels. Right now it is pulling back and at around 2330 level. So in our opinion, major pharma stocks may resume their primary downtrend if their recent high is not taken out sometimes next week. So Dr. Reddy's can be traded from the short side. Stop loss will be at around 2430 level. Cadila Healthcare can be traded from the short side, especially if this high 415 is not broken. Lupin can be traded from the short side with a stop loss at around 924 level. So all these stocks, the chart of all these stocks look similar, and they're in primary downtrend, and they are very likely to resume their primary downtrend. So these are the selling candidate for next week, provided the recent high is not taken out. So these were the stocks that I recommended you for the next week. I hope you will use your judgment, and this video will be posted in YouTube as well. You can ask your questions there. One thing I must tell you is that you have to use proper risk management strategies. You have to use with proper stop losses, and that is the only way to manage your risk. So with this, I conclude this session. I hope you have enjoyed it. Next week we will come back and we will meet with a new topic. Goodbye.